Good morning, everyone, and welcome to the European crossover webinar. And we've just got the release here on the Eurozone market manufacturing final PMI. Came in at 47.9, just a bit stronger than what the poll was. But these are final numbers. Got the German one, came out at 45.3, continues to remain relatively weak, to say the least. And then, of course, French manufacturing did come up above 50. The 50, which is the contractionary zone below that, came in at 51.1, with Italian at 48.9, Spanish at 48.5, pretty much in line. As we come in later, we do have UK final PMI also, and then let's see, rolling into the States, we'll have Canadian manufacturing PMI, as well as U.S. manufacturing PMI, construction spending, and ISM, which should go on and move the needles. And also, along with that, we'll have the sub-index, the manufacturing ISM manufacturing employment. Let's go and move this out of the way. We're seeing the dollar firm up a bit here after we saw that pullback on the close on Friday when we lost the 97.89 area here. So it's, when I say pulling back to the upside, that is, with the euro actually sliding back. And we're seeing the Canadian dollar hold up relatively well. Also, the dollar yen has also firmed up a bit. Anything major, although if you look at it when we're in the 30s right now, we're in the 50s, but once again, not anything major, but we are seeing the cable slide back after closing above a weekly level of, remember that key weekly level, which is 30.80. We should look for that to be well supported here, which is, once again, like I said, key weekly level. Put the bulls in control here. Also, Aussie dollar continues to remain weak overall. Now, we're still seeing general weakness in equity markets. Bear with me. See here with the S&P still, had opened lower and really came off of those lows. We're kind of hanging around here. I thought we might be able to get to about 32.58 overnight or in the late evening session. 32.50, I think it's 32.55 is 50% of this recent range here, with 32.58 being a level coming up. And I thought we might be able to make it there, but we're coming up a bit shy here. Also, move this out of the way. Also, we've gone and seen gold going in pair back. Pretty decent pair back here in gold after coming up as high as 1598, and then look at us now at 1580. So it's come off quite a bit as supposedly as China's trying to take some steps to kind of cool things down. We shall see how that goes and plays out. Let's move this out of the way. So let's just go and take a look at some stories overnight, and then we'll go and move into the analysis. Obviously, the bigger one is going to be the whole virus thing, and with how China's dealing with that, and we'll just quickly just hit some marks on that. Virus fears wipes off $393 billion of the China stock market despite the government support moves. Investors erased $393 billion from China's benchmark stock index on Monday, sold the yuan and dumped commodities as fears about the spreading coronavirus and its economic impact drove selling on the first day of trade in China since the Lunar New Year. A nearly 8% plunge on the Shanghai Composite Index was triggered by the biggest day's fall in more than 4 years. Chinese yuan blew past the 7 per dollar, and Shanghai traded commodities from the palm to the copper hit their maximum daily limits. The wipeout came as the central bank made its biggest cash injection to the financial system since 2004, and despite apparent regulatory moves to curb the selling. Total number of deaths are 361 by Sunday. You want to know what a real decoupling from China might look like, or what if everyone just stayed home and didn't buy anything? Economic thought experiment looks like, well, here you are, folks, says Rebel strategist Michael Every. The yuan began onshore trade its weakest in the year and down 1.2% by the afternoon. Shanghai traded iron, ore, copper, and soft commodity contracts all posted sharp drops. The new virus created much alarm. It's uncertain whether factory workers and how many of them will return. We haven't seen yet corporate earnings since the spread of the virus. Let's go, keep on moving down here. Bond prices surged with March futures contracts up for 10-year bonds, jumping 1.4%. PBOC said the stock's plunge had been irrational. Yeah, I doubt that. Amid the sell down, the PBOC injected 174 billion into money markets through reverse bond repurchase agreements, the largest move since 2004, according to DBS analysts. It's also unexpectedly cut the interest rate on the short-term funding facilities by 10 basis points. The chance of a benchmark lending rate cut on February 20th, the date of its next monthly fixing, has significantly increased. Let's see, it's a clear message that they want to take growth supportive measures and keep the market reassured, said Mayank Mishra, strategist there. Managing the situation well, the time of the repo rate came at a little quicker than some people were expecting. Beijing also said it would help firms produce all vital goods and resume work as soon as possible. So there's that. Bear with me. And the yuan and Aussie on the back foot as China. Markets stumble on the virus. The yuan and its proxy, the Aussie dollar, were on the defensive on Monday as China's share market reopened with big losses. Chinese shares tumbled after the 10-day break was extended. Australia, Singapore, and the U.S. are among the countries to ban entry by foreign nationals who've recently visited China. The number of new patients continues to rise, and even though the virus may be turning out to be none than a severely pathogenic, movements of people and goods are likely to be restricted for the time being. That surely will pour cold water on the signs of a rebound of the Chinese economy. See, the Aussie dollar was up significantly on the day, but was precariously close to its 10.5-month year low. The currency is often regarded as a proxy to the yuan, more freely traded because of Aussie's reliance on trade with China. Given the current trade sentiment, I would not be surprised to see if the Aussie dollar slipped below its previous 10-year low. To head off any panic, China's central bank took a range of steps to shore up the economy. We've discussed that. Fleeing to safe havens is a big theme now. We'll continue to sell currencies which they have long positions. See, the Swiss franc changed hands at 96.39 against the euro. The franc stood at 106.8. Let's see, this euro was at 10.84, but right now we're seeing that right now we're at 10.66. So we continue to slide. Britain laid out tough opening stance for future talks with the European Union, and there's that. And see, Bernie Sanders and Joe Biden running neck and neck in the Democratic contenders. And lastly, we'll go on and mention, as we said, because there was a pretty big move in gold. Gold skids 1% on China measures and stronger dollar. Gold dipped 1% on Monday after hitting a 4-week high as the China central bank cut reverse repos. Let's see here. There are chances for further economic improvement from China, and that's the reason gold prices have corrected, though the broad outlook is still positive. And as mentioned, we've already noted the skid here in gold. You can see here we got up to 15.98, and here we are trading now at 15.80. With that, let's go and move into the analysis, and we'll start with the euro. So the euro turned about on Friday during the equity sell-off. The pair starts the week perched against a broken trendline support, confluencing with the key level of 1105. The two consecutive closes above this level temporarily breaks the bear's hold. A daily close above 1170 would nullify the existing head and shoulders pattern. Support comes in at 1043. So we're on our lows right now here, 1063. Bear with me. So let's go mark this off, 1063. And the key is going to be here, is going to be 1105. Now, we've turned things around, but we're still the bias is still bearish. You can see here, we're below this trend line. As I said, you can see where we closed on Friday. So as I said, we would start the week out perched right along this trend line and this key level, 1105. You can see that there, 1104.5. Mox Nix 1105. So that's the key resistance to get beyond. If we can get beyond that, then we'll temporarily, and it's going to require two consecutive closes above 1105, and that would temporarily wrest control from the bears. But in order for the market to nullify this head and shoulders, we need a daily close above 1170, daily close. So for right now, the mode is still bearish, and we're looking, like I said, I thought we might even try now. I thought we might even be a little bit above that this morning. But like I said, this is a key level, and they're just backing off, and support's going to come in at 1040, 1043. My thoughts were if we did go and pull something like that, I think that we would come down here and we kind of sit there, and then we can start to move much higher. The reason I'm saying that, because the thought was when China opened, there would be an issue with them with the dollar, and that would cause, I won't say a flea, but some movement into the dollar, that the thoughts was going to be a bit of a dollar shortage with the issue with China. So to me, it's not too surprising that we're opening, that we're weakening the dollar considering the opening that we had in China. But I think that we will go and see support around that 1043, and probably a good area here. If you look in here, you see here 1036, probably on an extreme move down there to about the mid 1030s. If we do see that, I think that's going to be a good opportunity, buying opportunity for the euro. We shall go and see. Let's go and move on to the cable. So the cable closed above the weekly resistance at 3080, placing bulls back in control and opening the challenge to 3320. Immediate resistance is going to be 3230, followed by 3263 via the 2H levels, 2-hour levels. Support comes in at 3143, followed by 3102. Well, we're just about right there at 3102, just about. The key level is going to be, once again, that 3080, but let's go and put this at 3102. But remember, 3080 is that key weekly level. So if we do take a dip below that, and certainly there's the opportunity to do it, you'd be looking at 3080. Matter of fact, let's just go and mark that off. It's pretty close, but once again, like I said, if we take that dip, I think they'll support this move down here at 3080. On the upside, let's go and move into the 2-hour chart. Obviously, since it's under pressure, we're going to make a determination of where that resistance would come in today. And we're going to split the difference. You can see right here at 3146 and right up in here, 3162. So we're going to split the difference, come in right there, which is going to be 3153 for resistance. go move into the Aussie dollar. There we go. So we're looking at a weekly chart right now on the Aussie dollar. Aussie's sustained economic issues and natural disasters, the bushfires, coupled as a proxy to China, has opened the pair to a targeted move to 65.28 that may well push as far as 63.03. Pressure will remain with the RBA meeting this week. Resistance is 67.25, followed by 67.88. And you can see down here, let's pull this back. And you're like, well, where the heck is 65.28 coming from? And let's pull this back here. You can see what we're looking here. So we're looking for a move for what I'm believe is going to be a targeted move down to 65.28. Now the thought is that and I think it's actually down to a 10% chance that the RBA will go on and make a move. But to me, it just doesn't make any sense because the economy is under a lot of pressure. But is it a surprise move? Not really, because I mean we've already fallen out of the basement. You see what I'm saying? So, but that just might be what it gets us to 65.28. You know what I mean? So, but that's what we're looking at. We're looking on a weekly chart right now here on that Aussie, looking for a move to 65.28. Now let's actually see where resistance and support is going to come in at. And once again, this is a weekly chart. So support is not very far away. Holy smokes. Let's just say 66.67. We'll move into the 2-hour chart for resistance. $67.21. Moving on to the Kiwi. This past week has found the Kiwi fallen from grace, losing its bullish mode with 2 consecutive closes below the breakout level of 64.93. You can see how important that 64.93 is and actually launched us. The pair is likely to drift lower to 64.16, which is a 61% of this entire move, which was 62.01 to 67.56. Before buyers step in, resistance is 65.27 with consecutive daily closes above 65.46 for bulls to reclaim the upper hand. So we'd have to get above this level right here. You can see that right there for bulls to reclaim the upper hand. But you can see the significance of losing is 64.93. That was a key breakout level that really launched us on a 3-week, culminated a 3-week move here in the Kiwi, and then we've turned around and given all that back. And now it's turned bearish because we've had 2 consecutive closes here and here, 2 consecutive closes here on the Kiwi below that 64.93. Support at least on a very, very short term. We think we're going to get down to 64.16, but today's support is going to come in right there, 64.32. We are a bit stretched here. And resistance is going to be that 64.93 failed area. And as I mentioned, it's bearish now with the 2 consecutive closes below 64.93 before today. How important that was. Now, like I said, before buyers step in any meaningful way, I believe we will make it down here to 64.16, but you can see nice little band of support coming in. Probably see a little bit of a market holding steady, maybe a little bit of a bounce. Now looking at the dollar CAD. The dollar CAD continues to move higher, albeit without much technical fanfare. The pair ran into resistance at 32.49 on Friday before easing back a bit. Monday's challenge will be 32.69 as the pair is vexed by incremental moves. The support is going to be 31.77. And what I was stating is that we've had a decent little turnaround here at the dollar CAD, but you can see these moves have been just incremental. Like it moves a little bit higher, we move up, and then we just kind of sit there. Then we move up a little bit, and then we kind of pair back. So you would think that in light of how we've come back, that this market could really, if nothing else, just on short cover, really launch up. We simply have not been able to do that. But today's resistance is going to come in right there, 32.69. Certainly bullish, but once again, it's moving in incremental moves. And then support, we did pop for 31.71. That might be a little bit ways off. We'll go on, at least for today, we'll go right there, which is going to come in at, let's call it 32. Well, remember we had that big number before anyway, which was 32.07. We'll go with that, 32.07 on the pullback. But you can see here, these moves, despite turning things around, and you can even see this bar was engulfing here. You'd have thought that we would have launched, and once again, incremental move. Then thinking, oh, it looks like when I slow down, then we're going to pivot and moves up. But once again, doesn't launch above. So once again, the resistance cut for today is going to be right there at 32.69. Let's go and move into the dollar peso. The dollar peso has yet to respond in a meaningful way to the sell-off in equities. Concerns abound with emerging market currencies, but the peso has ignored the push and pull of the last month. You can see, and what I mean by that is look how we've been trading this tight range. So we kind of opened things up last week, but was it in any meaningful way? No, not at all, which is a bit surprising, especially considering how oversold we've been here. But anyway, nonetheless, support remains at 1865. Confluence with 1862, which is 161%, with a break leading to 1844. Upside resistance is 1905, followed by 1915. So I was taking a more broad look because, like I'm saying, okay, it's down here to 65, and up here is 1905, and a more broad look. But if you're looking on a very short-term basis, resistance is going to come in right there, 1893. And support will come in 1878. But as I mentioned, when I did the analysis of looking at, because we've been sitting here like a bump on a log for the most part, looked at it with a more broader outlook, which once again, 1865 support, 1905 resistance, but on a more shorter time frame. Once again, we're looking at 1878 with 1893 on the upside. Let's go move into the dollar yen. The dollar yen, after a failed upside breakout, spent the prior week below the key pivot of 927, turning momentum bearish. Weakening or declining U.S. 10-year yields are abetting the weakness, with the pair targeted to move to 706. Immediate support comes in at 778 with resistance at 886. So we're going to have that resistance, like I said, we're kind of calming down a bit. 886 on the dollar yen. Definitely bearish. And on the downside, considering we're trading relatively quiet somewhat, it's going to be right there at 814. 814 for today. With that, we'll go and move into the cash dollar index. So the dollar index has failed on the dollar index failed on the last day of the week to sustain a close above the weekly pivot of 97.89, turning short-term momentum bearish. Resistance comes in at 97.61, with support at 97.30, followed by 97.50. Well, we're above that 97.61, and we're seeing a little bit of a bid here with the dollar. You know, one of the things we talked about, because with the euro's under some weakness, was there was a concern that when China opened up, there would be this demand for dollars. And I think we're seeing that today. I don't know how much further is going to go and push it. I'm saying is the overall, but I'm thinking like for the euro, I think the euro, if we get it moved down into the, 1040s, 1030s, I think that's a heck of a buy at that point. So looking at resistance, we're actually going to go right there. Actually right there, 97.68. So we'll see what happens. It's 97.68. You gotta think we could push a little bit more, but that's a pretty decent area here. We'll call it right there, 97.72. 97.72. Support's going to be this same area here, this previous resistance area, which now support 97.41. We do have UK data out. There we are. And we know this 3080 is going to be key. Let's pull this out. Here we go. Manufacturing PMI out in a little bit less than a minute. Poll is for 49.8. It is final. So we'll see how much of an impact it's going to have. But that 3080 is going to be key. That's a key weekly level. Here goes, a couple of seconds. I don't see the number pop up yet. Nothing. Oh, at 50. Came in at 50. 50 even, and a little bit of a blurb here. You know, a little bit tough side. Nothing of any real consequence. Let's go and move into the cross rates. So the Kiwi Yen has cascaded lower, turning bearish after breaking the 71 cent area. Initial support comes in at 69.74. You can see that pink line. Confluence was 69.93, which is the 50% of this move from 66.30 to 73.55. Followed by major support at 69.11. Resistance comes in at 70.78, followed by 71.25. Bulls will need 2 consecutive closes above 71.40 to regain the upper hand. So you can see we still remain weaker here, and we've got this pink line here at 69.74 where the market's holding right here at the 50%, but you can see some good demand here at 69.74. We're going to once again go with that for our support. And as far as resistance, we'll go right there, 70.31. Definitely bearish. And looking at Euro Yen. The Euro Yen is treading water, locked in a tight range the past week, holding support at 19.94 with resistance at 20.43. A break lower will find value buyers at 19.25, confluence with 19.35, which is a 50% of this move of 15.85 to 22.86. Bulls will need 2 consecutive closes above 20.92 to seize control. So we're still locked in this tight range here. We're looking for support coming in at 19.94, not very far away. And resistance, you can see it right there, pink one, 20.43. Yen's trading relatively quiet today. So this range may end up holding. Very, very tight range. Let's go and move into the Euro odd. The Euro odd has catapulted higher, breaking major levels of 63.42. We can see 63.41. On the backdrop of the Aussie weakness, immediate resistance is 66.10. You can see we almost made it up there, followed by 66.77. The pair will find weekly resistance at 68.41. Support comes in at 64.25, followed by 63.76. The key is going to be on this RBA meeting, if we can go and come up there and challenge it. But you can see 66.10 is the immediate resistance. And support, you see this little bevy right there, all these touches right there, closes. Nice confluence here, 64.99. You can just basically call it 65 cents. You can see all the touches right here. We close, we open, close, we open here, close, and then that coincides with that top. So you take 65 cents right there. Let's go on and move into the Euro Kiwi. So the Euro Kiwi reversed with 2 strong days as the Kiwi has fallen to the wayside. The pair is pressing against 71.59. You can see that. That's 50% of this move from 66.18 to 77.01. Confluencing with 71.64. The key upside resistance for the bulls will be 73.09. A close above it sends a pair to 76 cents. Support is 71.02, followed by 70.18. So you can see right here, this 71.64, they actually just got just a hair above it. That's our resistance, 71.64. Confluence we have with that 50%. And support, what we're looking at on the support side is going to be 71.02. We're not that far away from it. And with that, let's go move into the Aussie Yen. Well, the Aussie Yen, after closing below key level 74.02, has spent the prior week drifting lower, culminating with sell stops hit on Friday. Support comes in at 71.88, with a potential move to 71 even. Bears will reload on a move to resistance at 72.57. Bulls will require 2 consecutive closes above 74.02 to regain the control. So once again, support, we're going to have it for 71.88. That's a pretty good little drift lower on the very, very short haul. Let's go right there. You can see the touches coming across here. Some demand. So we're going to go to 72.30. And on the upside, right there, clears the bell, 72.95. And with that, let's go move into the guppy. The guppy closed higher on Friday despite overall yen strength. Key resistance remains 43.81. A daily close above 44.30 sends a pair to 46.74. Support comes in at 41.90, followed by 41.39. So we're going to go with that 41.90 on the support. And resistance. It's going to be right there, that close. 43.02. And let's wrap up with sterling versus the odd. Sterling odd is broken above major level 94.83, opening the challenge to 99.86. Confluence with 2.0067, which is 161% of this recent move. And you can see that up here in the little stratosphere. That being said, we are seeing a bit of a weakness today. So support comes in at 96.16. We're actually below that support right now, followed by 95.34. certainly the cable's under some weakness. I don't know if we'll push all the way down. And the Aussie's kind of holding its own. Let's see right there. The high from 95.55. Let's go with that, 95.55. And on the upside, let's take a look at the 2 hour. You can see it right there, coming across right there. It's going to be 96.70, 96.70. Almost make the case here, but no, 96.70. See that low here, 96.70. And there we have it there. We'll go in and go back into the majors. Euro coming off of these lows. Must have tagged it, I guess, about 10.59 or so, kind of bouncing up a little bit. I think that it's going to be a good buy if we dip down into the 1040s. Very good buy. Dollar index pulling back from this 97, I guess about 68, 70 almost. And dollar yen relatively quiet. As I mentioned here in the cable, we're still sliding back, but that 30.80 is going to be very, very key. That's that weekly level. That's what we have for today. We shall see you in the chat room, and thanks for joining us here on the European Crossover.